welcome to this Wednesday edition of FreightWaves Now. I'm your host Anthony Smith, and we have a full lineup for you today. We have Falasca coming up soon, going to give us a broker update. We also have the man himself, John Kingston, back in town, giving us an oil update. But first, we're going to go to Strickland with Carrier Update, brought to you by Powerfleet. Stay tuned.
Hey everyone, and welcome to your Carrier Update presented by Powerfleet. I'm Strickland, and today we're going to look a little bit deeper into the coronavirus impact, import volumes, etc. Just see how it's impacting the freight market and domestically and not necessarily overseas just yet. So I've got the customs chart pulled up behind me. These are shipments coming into the port of Los Angeles. And you can see clearly there's a huge drop in import volumes. So looking throughout the year, this is the trade war, impact, pull forward, etc. So you have a lot of elevated volume throughout the year last year, and then it just plummets here. Now this is not necessarily that unusual. If you've watched some of our videos in the past, you can see back here, this is the effect of the Chinese New Year on last year. So you see import volumes drop dramatically, about 53% over the course of about 12 days. Into Los Angeles. So this was last year at the beginning of March. Well, this year we've dropped about 67% over the course of 15 days. Now, we haven't seen the signs of a turn or a shift just yet, but word is overseas, if you're reading your FreightWaves articles, or American Shipper articles, I should say, they're already saying that they're getting back to close to near full capacity in terms of factory production. So that should eventually show up here in these numbers here in the next few weeks or so. But in the meantime, carriers should be watching this number just to see there's going to be a lagging impact. Anything that comes into the country has to take time, get into a warehouse, etc., then get transloaded into a truck, and it translates to truckload volume eventually. This, however, has not happened yet, so we're not actually seeing this trough just yet because this just hit the country here in the last week or two. So what does that mean for our ports of Los Angeles and our big markets of Los Angeles, Ontario? So this is the single biggest, it was the single biggest freight market in 2019 in Ontario. Combine them both and they still the biggest two freight markets in the country. So looking at volumes coming out of Los Angeles and Ontario, you can see right here in November, volumes dropped dramatically. This is the winding down of the trade war. You look here and you see behind it this blue mountain, that's rail volumes. That's your international loaded container volume on the rail, and you can see rail is a lot more sensitive to these custom shipments fluctuating up and down than the truckload market is. Now the truckload market takes a little bit longer time for it to show up. Volumes drop, and you can see that actually a lot of this -21, -29% decrease in year-over-year freight volumes coming out of the country actually started back here in November. So if everybody's thinking that Los Angeles is dead because of the coronavirus, simply not the case. That has not even materialized in the truckload market in the United States to this point. It will be interesting to see if this does start to translate further in, because right now, these are actually, if you can see there towards the end, they're actually ticking up a little bit as we enter the month of March. So something to watch. Across the country and other port markets, again, you see a similar pattern. You've got Los Angeles, you've got Ontario, you've got San Francisco, you've got Savannah, you've got New York, New Jersey sitting up there. They all have a similar pattern. Now the New York, New Jersey one, of course, has been growing year over year. It's one of the ones that have a big growth, but the rest of them are showing similar patterns. They actually die off in October and November, and then they're starting to kind of pick up here. So there's really no significant signs or concern here in the domestic truckload market just yet. It should take another little bit to materialize. Now looking behind me now, the outbound tender volume index for the United States. You can see that volumes are actually about 1.6% higher versus this time last year. That has not necessarily translated into any significant capacity tightness to this point. If we are waiting on this coronavirus impact to come into play in the United States, we still have a few more weeks left where we see some of these port volumes. If you watched the Los Angeles chart behind me, it took several weeks for that volume to kind of ramp up. It's the same thing. So we're about 2 to 3 weeks away from seeing any real impact to the freight market. Now, will that mean a 1 to 2% decrease in outbound freight volumes? Not really sure yet. It's hard to translate those into actual freight volumes because you do have to get into a warehouse and it can sit for a while. It just depends on inventory levels and where those shippers are in terms of their replenishment cycle. So stay tuned to FreightWaves for any other future updates on the coronavirus and how it is impacting the truckload market.
The comprehensive logistics offerings from Powerfleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with Powerfleet.
Good morning, everyone. I'm Luke, and I'm bringing you another broker update. We've got some really good stuff happening in the market today that we're going to look at in terms of where to find some growth, especially on your calls today. But before we get there, let's take a look behind us. So, chart here behind us in blue, you're very familiar. This is our outbound tender rejection index. So we're sitting there about 5.66%. It's been pretty level, very suppressed, but not a lot changed over the last month and a half. Now, where you want to keep your eyes is on the green line here. So you'll see that's actually the outbound volume index, which is measured here on the right. So we're sitting a little above 10,000. It's a little over 10,200, and you can see that's really started to push up over the last week. That number is important. Anytime you see that number above 10,000, it means that the market is growing. There is more volume in the market. When it's below 10,000, it means the market is contracting and that there are less volume to move. So that's the good sign. So you might be asking, why are rejections so suppressed? Well, there's a lot of extra capacity in the market. We knew that got flooded last year, and that's still the case today. So just keep an eye. If volumes continue to push up, then you might start to see rejections move along with it, especially as capacity tightens. We'll keep an eye on it and figure out when it happens. For right now, let's draw our eyes to the map. So this is filtered currently for outbound tender volume weekly change. So this is over the last 7 days up until this morning. Markets in blue are going to be markets that are growing. There are more loads to move in those markets versus the red markets are going to be contracting. There are less loads to move in those markets. So some areas to keep your eye on. The really dark blue markets are experiencing growth of close to 30–40% week over week change in terms of outbound volume. So we see a little bit here in the middle of the country, north of Arkansas, and then a little bit up here in the Minneapolis region, a little bit west of Chicago, Spokane, Washington, and a lot of California has actually seen a little bit of growth too. If you were watching the carrier update, we saw that there's a good bit of decrease in inbound U.S. customs shipments. So it takes a little bit for that to come through due to the Chinese New Year and some potential slowdowns there with the coronavirus, which looks like there might be some increased freight coming. But for the most part right now, there's a lot of increased freight here on the West Coast and in the middle of the country and really along the East Coast. If you happen to have any customers in Maine, it looks like that is popping off close to over 50% increased volume. So you might want to focus on some calls there if you do have some customers. But otherwise, really as a whole, the market looks very, very good today. Now, one of the markets we're going to focus on is Spokane, Washington. So this right here is volume. The blue line is going to be year over year dry van volume change. So that 20% means that there's been a 20% increase in dry van volume year over year. That's a good sign. But it's nowhere near that 150% year over year growth that reefer volumes have seen. So if you're moving any freight out of Spokane, see if your numbers have grown by that amount. If not, figure out why, call your shippers, talk to them. If you don't have any freight here, there's a lot of opportunities to land some new business in this. Go to the shippers in these markets, show them these numbers, see if they're experiencing that type of growth as well, because it does seem to be growing at quite a rapid rate. Now we're going to shift gears here just a little bit and go to the St. Louis market. So if you're moving any dry van freight out of this market, you see this big trough that happened at the very end of February where we dropped from about almost 8% to there about 5%. And then we started to come back up. So you're going to need to increase your spot market rates for any freight going out of St. Louis, especially on St. Louis to Indianapolis. We're sitting close to 9% now. So if you're moving freight on those areas in the spot market, increase your bids on shippers. They're having a harder time covering their freight. I'm Luke, and that'll do it for today's broker update.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the Freight Tech Revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
Good morning, my name is John Kingston. I'm the oil expert for Sonar, and I'm here to talk about what's going on in oil markets. It's been a wild ride, it really has, and it's continuing. This is the price of ultra-low sulfur diesel at the wholesale rack level since the start of the year. You can see it's really been on a significant downward trend, and then you can also see, looking since about 2 weeks ago, how volatile it's been on the way up. A little, the diesel was the first market, the first financial market that really got hit by the coronavirus, because immediately oil traders sensed that it would cut jet fuel demand, and therefore you start to see this big drop. Right now, that right there on about February 8th, that is the first big market reaction to the coronavirus, as everybody figured that jet fuel demand would drop. Jet is a distillate, it is like diesel, therefore it spills over into the diesel market like this. And you can see we dropped down until about early February, and then we started to climb. Now, the fact of the matter is, on a retail level, what this has only meant is just a really fairly steady decline in the weekly DOE EIA retail average diesel price. So this has been good news for truckers, because this reflects what they're paying. This is good news for shippers, because this is the basis for the fuel surcharge. But I will concede that most drivers are probably a little bit frustrated in that this has not dropped by anywhere near the percentage that they keep hearing the price of spot oil markets are down. Spot oil markets are probably down around 50 cents, and since their peak, and the price of diesel at the retail level is down 20 to 25 cents. That's always kind of the way it's been. Retail prices will come down very slowly. Owners of stations want to hold on to those higher prices as long as possible. But as far as what's going to happen next, I'd love to tell you, but I'm not really sure, because on a day like today, for example, you've got equity markets surging, and you've got oil prices surging along with it. Tomorrow, you could have the Dow down another 500 points, and oil could be down with it right now. So oil is kind of a passenger right now in these crazy markets. But there's something else going on. Oh yeah, I wanted to note this, that DOE price is actually coming off of of retail prices, which we track in the DTS.USA, the DTS USA data series. I also want to talk about one other thing that's going on. OPEC is meeting this week. OPEC has a really serious job ahead of it. Right now, it appears that world oil demand will be down in 2020 from 2019. That almost never happens. They probably have to cut another 700,000 barrels a day from what they're doing now, which is actually 1 million off their quota. They've never really cut that much, or if they have, it's been a long time. They need some help from countries like Russia. Russia is mixed about whether they're going to make some more cuts. Saudi Arabia has borne the brunt of all of the cuts for the most part since the end of 2018. You've also got Libya is off the market, which has kind of been nice for OPEC. It makes their job easier. But if OPEC comes out of their meeting in Vienna, which by the way is being held despite the coronavirus, and they really don't make any cuts, then I think it's hard to understand what the bottom is. People are talking about maybe $30 a barrel. Right now it's trading up around $46 or $47 a barrel basis WTI. The bad news for the trucking sector on that is, while you're going to get lower priced diesel, those trucks that serve the oil patch are going to get hurt. This week, FreightWaves has had a story by Nate Tabak, our Canadian correspondent, about a Canadian truck company that serves the oil patch that closed down. You could see a lot more of that. So the Lord giveth, the Lord taketh away as the price of oil declines. That's all I've got. John Kingston talking about oil. Join us again.
And that's going to do it for this Wednesday edition of FreightWaves Now. The content doesn't stop here. We're always streaming around the clock, so check us out on all your favorite streaming platforms, including Apple TV. Also, if you're looking for a little bit more deeper insights on the latest industry trends, check out our Passport program, where you also get access to our world-class industry events, like our upcoming FreightWaves Live Atlanta in May. Thank you so much for tuning in, and we'll see you on the next episode.